Hello trader, if you are struggling to maintain consistency in your trading, then probably you are lacking some important rules in your trading strategy. So in this video, I will be discussing 5 important rules that you can integrate in your trading strategy to avoid losses in your trading account. Now I'm sharing these rules from my own trading plan. So make sure you stick till the end to take notes of all of these rules so that you can use them for your own trading strategy. Will really help you in your trading. Before I begin, make sure you smash the like button, hit the subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. With that being said, let's get started. So the number one rule that I use to maintain consistency in my trading is trading with the trend. Keep in mind, never trade against the trend. Trading against the trend means you are rowing your boat against the flow. Once you do that, it will be really difficult to maintain a consistency. Why? Because when you trade with the trend, you actually not using any energy to move with the flow. Most of the orders comes with the trend. Unfortunately, most retail traders, the mind works in working trading against the trend. You know that in my live stream, most of the time I receive a question, sir, is it time to buy? Is it time to sell? And when I look at the chart, I see that the price is at the bottom. So as a retail trader, you always find the bottom to buy and we find the top to sell. But you need to keep in mind that trading is completely different. It defies logic. That's why it is so hard for some people to trade with the trend. So then how you can maintain consistency by trading with the trend? Let me show you a quick example of what I'm telling, that trading with the trend. Okay, so let me show you this example. It's a clear example. You can see that it is euro dollar. Okay, what you saw, that there is a strong move down followed by this correction, another move down followed by this correction, another move down, and then we have seen a big green candle to the upside, right? Now after this, what we have seen, the price now slowly coming down. Now the traders, there is a big confusion may happen in this zone. Why? Because you see that everyone what will think that there is a big impulse to the upside on this green candle followed by smaller candles created retracement, and people, the traders will make mistake that thinking that okay, this is a double bottom here, the price has broken out, the price tested this neckline of this double bottom. Okay, here neckline of this double bottom, this resistance tested as support and formed a doji or a pin bar. Okay, bullish pin bar. Okay, now let's go long. Everyone will think that way. Most traders will make this mistake that thinking okay, let's go long from here, stop loss here or take profit somewhere here. Okay, but if you just replay the chart, you see the price did opposite. It just dropped. Why? Because of the trend. You see that this is the long-term trend. That is what you need to keep in mind. You need to give priority to the trend, not the candle or not any other things here except the trend. Trend is your friend until it completely change its pattern. Now to see a reversal, you need a very strong reversal pattern. Okay, consolidation or reversal. But for a little bit of you know that a pattern that is not enough to tell you that trend is reversing. Okay, trend normally take a long time to reverse. So what do I mean by trend take a long time to reverse? Let me show you one example of this kind. Okay, so look at this one here, guys. This is US 30 daily chart. You see that US 30 was moving in an uptrend, creating a series of higher high and higher low for a very long period of time, right? Now look at this, what happened, how long time the price created this consolidation. There was a long consolidation and deceleration, created a lot of up and down sideways movement before it changed its uptrend. You see, this is the uptrend to the downtrend. Right now it is in a downtrend for after long consolidation. A trend will not change just like this. It takes a lot of time to change a trend. So always you need to give weight to the trend when you see a clear market structure. So that is how you will find out that which way to trade. Always trading with the trend is the most important part, should be in one trader's trading plan. The second important rule is do not close the trade premature. Now every new traders, including myself when I started trading, does this mistake. Even the experienced trader that close the trade before reaching its full potential. Yeah, this is true that sometimes you need to manage the trade. Sometimes I do that. We need to close the trade if the market condition changes dramatically. But in most cases, you need to allow the trade to reach its full potential, that you think that according to your analysis or according to your strategy where it can go. So this has happened because of the emotional response that we have during the trading, because the market will never move in one direction. It will move in one direction and then will come back down, and again will move and then will come back down. That's how the market moves. This is the normal rhythm in the market. So what happened? Let's say we took a buy trade and the price gone to certain profit, and when the trade come back again, we feel like, okay, we have lost that profit, but it's still there. And that's how the market moves. Even you could see the trade came back to negative and then it will go back up again, or even it could hit your stop loss. But you need to allow the things to happen. And if you look at the trade over and over again, and you always expect that always I will be in positive, I will be in profit, it's not possible. And that is why normally it happens that, let's say if I take a trade and my profit target is, let's say, $100. Now when the trade went to $50 and came back to zero, we think that, okay, I lost that profit. Why did I do that? Or why I'm losing that profit? Now again, when the trade goes to $20 profit, we feel like, okay, last time the trade came to $50, I was supposed to get this money. Now it came back to $20 profit. Let's take that profit, otherwise I will lose that money again. It might go back again to the zero. So that's how the emotional response comes, and you close the trade premature. But it could go a lot, even more than your profit target. So that's why you need to allow a trade to evolve in its full potential. And to do that, I apply strategies that I call as set and forget strategy. It's like place your stop loss, place your entry, take profit, manage the risk, and then forget it. Okay, let the market does its job. And that is the best way I found to avoid any kind of emotional trigger during trading. So the third rule one must keep in their trading plan is do not trade without stop loss. Guys, this is very, very important, and I see that many traders does this. Okay, I also did when I started trading, and I learned from this mistake after blowing couple of accounts. So if you trade without a stop loss, there will be a time that you might wipe out your account. There is no doubt about it, because you see that, first of all, let's see why this happened. It's happened because you wanna avoid pain. Hitting stop loss causes a pain inside us that we lose money, and especially it happens when we have a couple of losing trade. Let's say 1, 2, 3 losing trade, and we feel like, okay, I lost all my gain, or I lost some money. I wanna get that money back, and we take a trade with a big lot size without a stop loss. So we feel like, okay, if it goes down, goes up, or negative, I don't care. I need my money back. And I put a big profit target or a small profit target, but I take a big lot size so that little movement will give all my losses. And that's how the human thinks. Everyone thinks that way. And that is the main cause of damage of our trading account. So to become a trader, to adopt the habit of a trader, You must be comfortable in losing when it comes to lose, but at the same time you have to be comfortable in gaining also. You know that without trading without stop loss is getting, basically you're giving away money to the market. When you keep your stop loss open, then you basically told the market, take everything I have in my account, it's open door, everyone come and steal everything in my account. So this is not a proper trading psychology. Okay, you have to be very cautious about you losing rather than gaining. You have to keep a stop in entering to your trading account, invading in your trading account. You can say that, okay, I only allow $10. Okay, if you take the $10, not more than this, like that. You have to be very strict in losing money from your trading account by placing a proper stop loss and by giving a proper applying a proper risk management plan. And that's how you can maintain consistency in your trading. So the fourth rule that one must keep in their trading plan is do not chase the losses. It's very important, guys and girls. This happens for everyone. See, all humans think almost in the similar way because we have some common thinking. Our mind is almost, we live in a society where we learn in the same way, so we think in the same way. So when there is a loss, we had a tendency to chase the loss. So how do we chase the loss? By opening unnecessary trades, by taking a big risk on a single trade. So let's say we had discussed in the third rules is that when we had a loss, okay, we forget about the strategy. We throw the strategy into the window. We say that, okay, I will maintain the strategy, or I will take the trade according to the strategy from tomorrow. But today I had a loss. I first need to gain that money back in my account. Then I will follow the strategy. And that is how we chase the losses. So how do we chase losses? By taking emotional trades. Okay, where there is no trade, we take trades. And another way we do that is by jumping on the lower time frame. I saw many traders does this, jump on a lower time frame. Let's say your strategy you use on the hourly or in 4-hour time frame, but when you had a loss, you jump on to even 1 minute's time frame or 5 minutes time frame to get a lot of trades, and you see that the chart work in the same way. Okay, you see that there is a lot of trade. Now let's sell here. Like, you try to create some new trades so that you can gain your losses, and that's how a trader lose a lot of money. So to stop this, okay, to maintain a healthy trading account, do not chase the losses. So when there is a losses, try to figure out why this happened, what the mistake happened, and don't do that next time. And that's how you can learn from your mistake, and that is the right way to become a trader. Okay, so the fifth rules that one must keep in their trading account is do not trade during the high impact news announcement unless you have a very specific strategy for that, which is very rare. See, this is a human tendency. When there is a market volatile, we feel like, okay, I'm losing trades, I'm losing money, especially if you have a couple of losing trade before and then there is a news announcement and the market is volatile. We feel like press the button, get the money in my trading account that I lost. Now the market is volatile, let's buy or sell. Because during the high impact news announcement, guys and girls, you can't trust the market. You can't trust the price action. You can't trust the trend. You can't trust anything. Okay, the market will work like a crazy without following any pattern. And that is why it is very difficult. And also during the high impact news release, you see the spread widens a lot. Sometimes even only because of the widening of the spread, you might get a stop loss hit. So it is very important that you keep track on high impact news announcement. Now if you don't know how to keep track, there is a website called forexfactory.com. This is a free website where you can find a news release. You can see on the screen, this is the website. that where you can find all the news announcement timing, where you can see when the news is being announced, and you need to manage the trade accordingly and try avoiding trading during the news announcement. It's very difficult to make money if you trade during this news announcement. It's just crazy movement, and there is nothing from this trade you can gain except losing. Okay guys, so these are the 5 rules that I maintain in my trading plan, and I sincerely believe that these rules will be helpful to you if you use in your trading plan as well. Thank you for watching. I'll see you soon in my next video, and also watch these 2 videos will help you in your trading.